Welcome to the program. Today we'll talk about what's happening on the markets and the economy. We'll look at some changes to home loan rates and we'll review the New South Wales budget. I'm Marty Switzer.
I'm Paul Rickard.
And we're mad about money. Paul, US markets down last night. Energy prices going into what's been called a bear market now. Are you concerned about that?
Yeah, I'm a little concerned. I mean, I've been a bit concerned about this Aussie market, Marty. It had a good 130 points over the last 5 trading sessions before yesterday, down 47
Nice
yesterday.
bounce, wasn't it?
Nice bounce. So, look, I think we're in a range, but we're going to get... I mean, we've got two forces here. Obviously, the US market, record high on Monday night US time. But oil and other resource prices are under a little bit of pressure and people are feeling a little bit nervous about the banks.
So energy price is going to be the new negative narrative that's going to occupy the headlines next couple of weeks?
It could well be. Go back to February 2016. So just, that was all the thing less than 16 months ago was about oil prices.
And iron ore at the same time.
And iron ore at the same time. And you remember, not just here, but more, the oil price really dominated what went on in the US markets here in Europe for a couple of months. So, Look, this is yet to really impact the markets in the big time, but it can't be good for Australia in the short term.
The Amazon threat's also continuing with the acquisition of Whole Foods on the weekend, which is a big US shopping business. 475
stores, I think, across America.
Big brand.
Big brand. And, obviously it's about distribution and giving them, it's about combination of the online offering with the bricks and mortar. Look, I think the Amazon threat is real, but my guess is it's overblown here in Australia because if they're spending all this money in the US and they're focusing on their home market, not sure where Australia really fits into that, but like all markets, we're going to, stock markets anticipate. They react before things happen, not when things happen. And that fear is probably not going to go away in the short term. So it's still a courageous buy out there in those retailers, but maybe a bit of a bounce just in the short term.
Bit of news in the home loans market with Westpac making some moves yesterday on interest-only loans.
Yeah, look, a typical bank, I mean, they cut their variable rate on owner-occupier principal interest loans by 8 basis points to 5.24. But of course, what they giveth, they taketh away. So if you're an investor or an owner-occupier on interest-only loans, they went up by 34 basis points. So 8 basis points cut on the standard rate for variable mortgage rate, a 34 basis increase for investor and owner-occupier interest-only loans. And for Westpac is half their book. And so an investor, interest-only loans, 6.3%, that's going to be a big rate now. So I think there's some issues there for the home market. But even so, Marty, I think what really stood out for me was that their standard variable rate, which is the same as the other major banks within a few basis points, is 5.24%.
That's high.
That is high when you can get deals out there for big figures 3 in some cases on a P&I loan.
At Switzer Home Loans, we'll at least get you a 4 or below.
So really, I suppose, big tip out of that is if you've got a home loan, have a look at what you're paying and think of...
it's not that hard to refinance.
It's not that hard to refinance.
It's a little bit of work, but not much.
And the banks basically thrive on the fact that most of us are asleep. Inertia is how our banking system stays so profitable.
Yeah, they leverage apathy, don't they?
They leverage apathy, exactly. As an ex-banker, I know all about that.
Now, moving forward, the New South Wales budget, that's got some pretty positive headlines, but you're not so sure about it.
Yeah, look, it had some great headlines. I actually think it's a B-grade budget because, look, New South Wales is in a fantastic situation. To be fair to the Premier, the hard work in New South Wales has been done over many years. Okay?
And Barrie did a lot of that, didn't he?
Yeah, and Farrell, Fatty O'Farrell and Baird, and Gladys, which she was Treasurer, did a lot of work. They really cut expenditure really carefully and they've managed the recurrent expenditure. But New South Wales is largely where it is because of the boom in the housing market, huge increase in stamp duty, huge increase in land tax. The whole New South Wales economy is geared to, a residential and property market boom. And when you finally get choices, I don't have a problem with spending more on infrastructure, but, next year, for example, revenue grows by 2.4%, expenses go up by over 5%. So they're putting a lot of money out there. We've got silly things like this this active kids rebate, $100 non-means tested expenditure for any child, school-age student.
We've still got payroll tax.
Nothing on payroll tax. Nothing really to deal with the big issues that New South Wales will face because, the housing boom will come to an end, and despite their projections on stamp duty and land tax keeping on going up, New South Wales will need some additional stimulus apart from when the housing boom stops.
They've got to help business.
And they're doing nothing for business.
If you remove costs like payroll tax, that's going to help business employ more people and grow the economy.
Yeah, so I reckon that the choices, the reason why it's B grade, I just think they've made the wrong set of choices. I'm all for more infrastructure. I'm all for, but do you need a whole lot more in the recurrent expenditure in health? And do you need things like the silly active kids rebate? Let's actually just see some hard work, cut some business taxes, think about what the employment growth is going to be like in 2 or 3 years' time, not necessarily what's going to happen the next 12 months in the electoral cycle. B grade, I actually think Gladys is turning out to be a bit of a B grade premier so far.
There you go. Thanks, Paul. That's all we've got time for. I'm Marty Switzer.
I'm Paul Rickard.
And we're mad about money.